Michael Burry has exited his $1.6 billion bet at a 40% loss. But hang on a second. That's very misleading, and it's bothering me that people are saying it. We're going to break down what we actually think he really lost, which is a fraction of that money. But also, he's placed a few new bets against some big companies, and we'll break that down right now. So Michael Burry did what's called buying puts. I'm not going to get into the exact math of it, but basically it's a bet where he's saying, I think this stock or this group of stocks is going to fall. And if it does fall very quickly, I'm going to make a lot of money. But here's the thing. When you buy a put, you only spend a fraction of the cost of the company. Let me show you an example. So I've pulled up Street Smart Edge on Schwab. And what it allows me to do is pull up the puts on something like SPY, which is what he bet against before. So let's go to December of 2024. If he wants to bet that the stock market's going to fall, and let's say the stock market right now, SPY is at 450, which is about 4,500 S&P, and he wants to bet that it'll fall below 300. Look how much he has to put up. 1% of the money, about $3 worth for every share. That's it. Now, how does he make money? The faster SPY falls, the more and more this costs because this price is getting a lot closer to $300 a share. And if it falls below, he's going to make even more money. So that's what he's doing here. My guess is that $1.6 billion bet, he actually spent $26.5 million. We have it right here on an article. And this is an estimate because we don't know exactly when he made the bet, what the expiration dates, etc.
You can see it was about $18 million on the SPY bet and $8.5 million on the QQQ bet.
So when he bet 26.5 and lost 40%, according to this gentleman, he probably lost about $10 million of his fund, which is a big chunk of his fund.
It is.
But it's not the 40% on $1.6 billion that everybody keeps saying.
Everybody is saying, and it's like, guys, that's not even remotely accurate.
Now, in fairness, though, Michael Burry is getting a lot of flack on Twitter.
He is.
People are calling him, people make the joke that he's predicted 10 of the last 4 recessions. Actually, the numbers are getting even more crazy. That he made one big bet once before and was right, and he's been a dud ever since, maybe. But if you look at his performance, there are websites that he has outperformed the market even the last 5 and 10 years.
And I will say, people give him crap for a lot of his big bets, but he is often right. He's just very early.
Yes, I know how that can feel at times. Now, he has a new bet. It's funny, we were in the car yesterday and Mo says to me, Paul, Michael Burry bought SOX, SOXX, and that's the semiconductor index. I was like, he bought this? He's like, yeah. I'm like, he's betting in favor of NVIDIA and all these ones? I was like, wait a second. Turns out, no, he made the same type of bet. He exited his SPY and QQQ short with the puts there, and he bought SOXX. Yep. Why? Because he probably sees the recent run-up in all these
the Magnificent Seven.
Magnificent Seven and all these chip companies and said, I'm going to bet against this. Yeah. So let's pull it up and see potentially what kind of bets you can make against it. Oh, you can't even do it on here on Schwab, can you? SOXX. Oh, there it is. So if I want to go out maybe to January 2026, and SOX is currently at 512, and I want to bet big against it, it's going to drop to 300. I'd be paying $12 per share for that. $12 per share. Let's go look at the history of SOX. So we're going to pull up SOX on our software. Look at this, Mo. All-time high, 548, which was early last year when the market peaked. And the low in the last 52 weeks is 297. Now, guys, what companies are in SOX? Mo, can you pull up which companies exactly are in SOX and we can go through them? Because what he's trying to do here is say, listen, I think the market's overvalued, but I think this one industry is even more overvalued. It'll have a lot more volatility, which is indicated, by the way, by how expensive the put option was. If you remember, SPY at 450 to buy a $300 put was about a third of the price. Granted, it was a year after that, but still. What stocks are in here?
So AMD, and you can see the weight here, 9.08%. Broadcom, NVIDIA, Intel, Texas Instruments, Qualcomm, Micron, KLA Group, AMAT,
Applied Materials.
Technology. Yeah, let's see what else we have.
So the basic bottom line is he's making a bet that all these semiconductor companies are just massively overpriced from hype. Mm-hmm. And you look at the parabolic rise of a lot of these like NVIDIA and things like that. And I don't blame him for making that bet. Now, could he be wrong? Absolutely, he could be wrong. People are saying on YouTube, we see comments, he is the next Jim Cramer. Well, Michael Burry has a much better process than Jim Cramer. Much better. And Michael Burry doesn't have the public to sit there and make happy. Jim Cramer needs to get people to click on his show. They need to watch his show. Michael Burry doesn't. Is he active on Twitter? Sure. Until every 2 or 3 days, he deletes his Twitter account.
Is that how frequent it is?
No, it's not. I don't think it's that frequent. But the point is, he deletes his Twitter account a lot. I would not criticize Michael Burry because I think the reports I've read is, and please, guys, correct me if I'm wrong, that he still has outperformed the market over the last 10 years. He is a stock picker, and he does a pretty good job with it. He's in Alibaba, which we own Alibaba. Again, don't buy any company just because we own it or Michael Burry owns it. Understand the company.
Yeah.
Right?
Alibaba, JD.com, Booking Holdings.
Oh, Booking.com, huh?
Yep.
He also bought
actually
a
bought
put,
a put
so he's
against-
hedging against
yeah.
that one.
Stellantis.
Wait a second, look at that. He owns 1,500 shares of Booking, and he hedged on 2,500 shares of Booking. Wonder why that is. So what I don't like, Mo, is if you look up there, it has 48%. They look at the nominal value of the shares as his value. That's not accurate at all. That's the problem with when somebody makes a bet using puts and options, it really distracts people from, 48% of his fund is in the stock short. No, it's not. When you buy a put, you can only lose the amount of money you invested in that put. Not the value of the shares. It's the amount of money you paid to get that option. That's what makes it an option. It's a much cheaper price. Now, we have no idea of knowing right here what he bought, what dates, what future dates, anything like that. All we know is he has 100,000 shares shorted, essentially, of SOXX. And that's his bet. And he wasn't right on QQQ and SPY.
For that short period of time.
For that short period of time, yeah. I mean, that's a lot. That's a big loss.
Yeah.
That's a big loss.
For a quarter.
Right. And he has about 100 million. That's funny. I was going to say he had about 110 or 115 million before. Now, if 48% is 47 million, then he has about $100 million right now. It's a big loss.
Yeah.
So, guys, criticize Burry all you want, but I will say this. Look at his performance over long periods of time. I do believe Burry has a good process. Is he quirky? Has he been more negative than most? Yeah, but all the value investors I know have been negative for 5-7 years. Every value investor I know has been, I can't believe this market. Look at these valuations. It's gotten worse and worse and worse.
And please correct your friends when they are saying that he lost 40% of his 1.6 billion.
It's incorrect.
Please correct people on this.
That's $640 million. He did not lose that because his fund would be gone. His fund would be gone. So guys, if you like these explanations, I ask you to do one thing for me. Subscribe to the channel. I appreciate your time.